Hey guys, so today this is just going to be a lesson on basically momentum trading and how to enter at the right time. This is going to be, I think this will probably be a lengthy video, but I need y'all to really pay attention because this is a lesson that I had to teach myself. A lot of people don't really harp on this, but it's something that's really important, and it's how to enter a trade at the right time. So what we're going to do here is I want you to start looking up here at this top example, this first example up here. If we see there had been a large bullish move up, and we see that there'd been an immediate consolidation kick in from the bears. The problem with this example is that the consolidation had already happened. If this makes sense, I want you guys to visualize this, and I've got something I want to show you on this next slide here. If you see a candle like this, what does this mean? Right? This means, and I need you guys to visualize this in your head, that in the 5-minute period there could have been two separate bearish moves in which the market plunged in a certain direction. Okay, and likewise, if you see this candle, this means that there was an initial bullish push plus an immediate bearish response. So the candle ended up looking something like that. So now that you guys can kind of sort of see what I'm trying to get at, what I'm saying is that in examples like this first example at the top here, what we can see is that the move had already happened, if that makes sense. Right? So the current momentum of the market was upwards, right? So the current momentum of the market is moving upwards, but the consolidation kicked in and it had already happened, right? Because the bearish candle, it's too big. Right? That means the full effect of the consolidation movement had kicked in. Whereas I want you to imagine these three green candles I just drew up here. Imagine these three green candles look something like this, right? And the bullish market had been continuing upward for a long time, but then this bearish candle, while it is considerably large, it is not dropped down to at least where the market started losing momentum, as you can see. And then I would suspect it would end up looking something like this. And let me just give you a real world application here. So what we see here is that the market had moved up. And what I'm trying to say, the point of this video is to give you need to enter these trades at the right time. So if you see the market had continued moving up, and then there had been loss in momentum, followed by a pin candle, which is this green candle, followed by a pin candle. Then there's a bearish confirmation. You need to bet down immediately when you see the market starting to turn. Don't wait. Even if the bid and ask prices are telling you don't do it, you need to do it immediately. Because if you would waited to see this large bearish engulfing candle, the large move kick down, then you would have been wrong in saying that after this candle you predict the market would continue to fall. If you had predicted that the market would have continued to fall after this large bearish candle, you would have been wrong, because as we can see here, it ended up a green candle. And another example, that was on the Euro-US charts. This was earlier this week, and the same thing happened. I think this was about a day ago on the Great British Pound chart. So there had been a large move upwards. The bears had started to lose momentum, or the bulls had started to lose momentum. They kept fighting up, and then they really tried to push higher, got rejected, and then a pin candle formed, signifying that the market was going to turn directions and consolidate before a bearish move could continue. So after this pin candle forms, that's when you bet down, or at least say that it'll end below the established support line here. And so you would have been right. The market would have continued to fall, but if you'd bet down after this trade, right, the consolidation movement had already happened. So if you said the movement would have continued falling, you would have been wrong. And to solidify this, I have another little example I want you to imagine. Pardon me. So imagine that this market had been, we'll look at this top example here. Say the market had been rising, and then there had been a huge, in the matter of 5 minutes, a huge consolidation move had kicked in, right? A lot of traders, and a lot of new traders specifically, would have bet that the market would have continued to plummet. But I would argue the consolidation movement had already happened, right? It had already happened, so I would expect the bulls to step back in and respond and take the market higher in the current direction of the market. However, Down here, as we can see, if you saw these, imagine these two scenarios, the top and this bottom scenario. These two scenarios are the exact same points in the market. Say you had just seen a small breakout candle for the bearish side, I can guarantee that the trend would have continued in that direction in the next 5 minutes, because that's the breakout. Look for the breakout, not for the actual move. Because if you jump in on a trade too late, then the move would have already happened and you would have been losing money. And this is just something I need you guys to really think about when you're trying out on your own strategies. My number one rule is look at the overall direction of the market and play with demo money before you try with real money. Guys, just because I'm telling you this doesn't mean what I'm telling you is true, right? You need to look for these on your own. They happen all the time. I'm going to try and find you guys another example here. And like, these just happen quite frequently, and you guys need to just watch for these. Like, perfect example right here. So we could see that there had been a established support zone in a bearish market, and then we see a huge drop downwards. A huge drop downwards. However, if you had said the market would have continued to fall, you would have been wrong, because the market actually continued pushing up, because this candle was too large. It was too large, and the main bearish move had already happened, right? So you just need to watch out for things like this. These happen all the time, and the thing I'm trying to get at is, don't hop on the trend is your friend type trading. You need to be a little risky and say that, okay, the breakout is happening now, so I'll say that it'll continue in this direction, right? Instead of going with the current trend, if that makes sense. So this is just Poke Binary with another video. Entering the right trades is something you really need to watch for, and it's something you guys really need to pay attention to. So please subscribe for more. Please like the video. I'll keep putting up videos almost daily. I really appreciate the support, and I'll catch y'all